Hi everyone, welcome to a new video. It's Moises, and today we will study which are the best liquidities to trade in the market. The market is always moving seeking liquidities, either if it's external, internal liquidity. It's always seeking it. It's the only reason the market is moving. So if it is the only reason that the market is moving up or down, it is of supreme importance to master liquidities, to know which are the highest probability liquidities we should look to trade, to know whether this high or low is being broken, to understand when we have a false and a true breakout, so we can capitalize on it. We will not only study which are the highest probability liquidities, but we'll also see how to actually trade them. And all the information, all the details in this video, once truly mastered, can truly give you financial freedom. Trading using liquidities, I'm confident, is the best way to get the highest probable and most profitable trades. And we shall see and realize all the details. How long are you going to wait before you demand the best of yourself? Life becomes more meaningful when you realize the simple fact that you will never get the same moment twice. 20 years from now, you will be more disappointed by the things that you did not do than by the ones that you did do. So throw the boldness, sail away from the safe harbor, leave your home, go to another country, take the risk, catch the trade winds in your sails, explore, dream, discover, because one day, in retrospect, the years of a struggle will strike you as the most beautiful. If everything around you seems dark, remember, you might be the light. Alright, so welcome to the best liquidities to trade and how to trade them. The market constantly seeks liquidity, and wheresoever a liquidity purge occurs, there lies a high probability trading opportunity. We will explore the most promising liquidity pools to identify trading opportunities and then analyze how to trade them. Our goal is to distinguish between genuine breakouts from liquidity, from highs and lows, and false moves designed to grab liquidity before reversing. The first and an obvious liquidity that will always give you an opportunity for a scalp or a short-term trade is previous day highs and lows. Not only are good for the short term, but they give you so much information about what can happen in the next days, as we'll see. So this is an example from last week on gold. And let's observe what happens here. So let's imagine that this day finishes and we are on this day. This day opens and we have an internal candle. You mark previous day low and previous day high. but nothing is purged, nothing is taken. Therefore, these days are usually choppy, not the best to trades. I don't like when you're trading inside a higher time frame candle because it is normally chop unless you're trading the 5 minute or scalping is not a great way to get good risk reward trades if you want to make some good money. So, but yeah, I don't want to go on a tangent here. Now, it's an internal candle, right? And now the next candle that opens, we take previous day high, and we also put the other high that we had the internal candle. So once you have an internal candle, you will expect the next candle to purge those sides. Now here we take previous day high and the other day's high, and then we drop into the 50% of this range. Important lesson. It's always important to pay attention of the 50% of any range. And if you take profit there, you'll lose a lot less trades. Think about that. You can backtest it and you can thank me later. Now what happens here, right? We have this day and we have marked previous day low and previous day high. What did we do? We break above previous day high and close back into the range of this candle. So knowing this information, I can be expecting some things. You can try to guess what will you expect here if we took previous day high and close back into the range. Is it a false or a true breakout? Ask yourself these questions, and you can go analyze the lower time frame to see what happened. And also what happened next. So maybe this example is going to help you from DXY daily chart again. We're looking at previous day highs and lows. So let's start with this one, right? We're here. We open the new day. We have previous day high, previous day low mark. We take previous day high. We close back into inside of the range of this day. We break falsely the high of the previous day. And then we expand the next day into the low of that range. Again, the same. Previous day low, previous day high, and then we also close above it, so price is going higher. Here, we are on this day, we open this day, we have previous day high, previous day low mark. What happens? Price just expands and breaks truly above previous day high. Therefore, you're not bearish. You're looking at the specific highs and lows to see whether is it breaking truly or not. So breaking truly or falsely above a candle's high or low, where the liquidity is resting, will provide you crucial information about what is going to happen next and the direction that the market will go. So we'll see this now more clearly on the weekly chart. We saw previous day highs and lows. Now, previous week highs and lows, they give you more information, especially about where the 2 or 3 or even 4 weeks what you can expect next. So whether we break truly above a previous week high or low will determine the direction for the coming week or weeks. So what do we see here? we're at this candle. We have previous week low, which is a weird low here, but you can also count this one, which was also taken, right? Internal candle, next candle, take the low from the candle which was never taken, plus this one. So you not only you have previous week low, you also have the low of the candle that we have the internal one, right? You have two lows lining up to previous weeks. And then we purge it, false breakout, close back into the range. Next week what happens? Target the high, take previous week high, close above it, therefore next week is going higher too. And now what happens here? Take previous week high, close back into the range, the week closes back into this range. We also took this high. Therefore, what will be reasonable to expect for us? A move towards this low, right? As you can see, the information of how some weekly candles are closing is giving you the information for what to expect on the next ones all the time. And like magic, right? Close back into the range, 50%. And then take the low and then continues. So previous week highs and lows will always be essential for the overall direction of the market in the lower time frame. Think about that. The market in the lower time frame is going to move based on where the weekly candle is going to expand. Therefore, mastering the weekly candle range combined with the monthly and daily, you can trade anything, anywhere, anytime, any style. You can do everything. So it's like magic, it's beautiful. Now, previous month highs and lows. Whether we break truly above a previous month high or low, or falsely, will determine the direction of the upcoming month or months. Also quarters. So we have this month. We open, previous month high, taken. What happens? Okay, we close back into the range, so I will expect this low to be taken. But no. Before we go for the low, we have first to break below the 50% of the range, retrace into 50% and expand. And not only that, but we're taking previous month low and previous month high. Right? We close this candle. Next month we're expecting a move down. We get it, take previous low, previous month low into the 50% of the range. It's always 3 candles. And then you get a false breakout and expand higher with violence, breaking and closing above previous month high. So we close above it. What do we get therefore? Higher prices. What happens next? Let's see. Now this month we close it. Next month I'm looking at previous month high to see what's the deal, right? What's happening. So, we close, but it's not that convincing, right? It's not. We pretty much close at the same level as previous month high. However, we still close inside the range, right? We didn't break it. We didn't close truly above the high. So I'm expecting again a move down to this low. But what do we get? The same 50% of the candle of the range, taking previous month low, closing back into this range, and next month we take this high. You see what is constantly repeating in different markets, in different time frames. There is no luck. You can go look at it yourself right now. And then this month, are we breaking truly or not from this high? No. Right? Close back into the range. Therefore, we expect the low, 50%, expand, low taken, close back into the range, and then continues higher. Once the month closes, it will provide you the information of what to expect in the next month, just based on the highs and lows. We're not using anything else right now. No key levels, no market structure, no fair value gaps, nothing. Just looking at previous month highs and lows, you see the power. Right, so the next is equal highs and lows. So you can see here, Solana. Equal highs and lows, you just see them visually, right? You can see here all these lows piling up here, building liquidity. Those will always get purged sooner or later. Now, this is an important statement. To know the highest probability low, so the one to pick as the main low you want taken, right? Because why don't you pick just this one or this one? Why do I pick this one? Use a higher time frame. The lower time frame equal lows are an extra confluence to the higher time frame candles, right? Think about this. Another, gold on the daily chart, right? We see here these equal lows building up. Here too, right? Not only we have these ones, but we have these ones too. So we have even more reasons to expect downside. And when you have these equal lows, not only you can wait, like, a lot of people, they will be just like, oh, I'm going to just wait too long. No, you have two trades. You can trade the journey to the low or the move here if the market makers show you that they want to move price higher after taking the low. If you see the signs, if you understand whether we're breaking truly or falsely, then you act accordingly, right? Let's say you're short from here. If we break falsely, you can hold the short until these lows. If we show signs of bullishness, you can go long and close the short. Now the weekly chart. Right? You see the higher time frame gives you the clarity for which to pick. And on the monthly, we're going to even see it more clear. Right? FVG. Now, other that are relevant is combining equal highs and lows with trend lines, which gives you a more probability for what I like to call violent moves. So it's low liquidity and resistance. When you see price grinding, forming these moves, that is not moving like up and down and forming a clear swing high where price can have a retracement or reverse. When price is moving like this, you'll always have violent moves taking this trendline liquidity, like these channels. And better if you combine it with equal highs and lows, even higher probability. Right, buy and move. Now, there's something to think about. A little gem. If a swing high or low is formed rebalancing an imbalance, then you shall expect that low to not be broken truly if you expect price to continue in the same direction. This was Bitcoin last week. You can look at the chart right now, at the current moment. So study this deeply. And again, thank me later. You can read again. Now, important gem to study. Another gem. So, seek a higher time frame key level in every liquidity pool you're looking to trade. Here it's repeated. Yeah, you're looking to trade. So, we have a liquidity here, but this liquidity is not just a previous day high. It's also a previous week high. There are also equal highs. And there's also a trendline liquidity. So they're all piling up, giving you even a higher probability trade. But not only that, now you combine it with a higher time frame key level. And that is where the magic will happen. Now, how do we actually trade these liquidities to apply this valuable knowledge we just learned? That's a great question, right? The answer is complex, yet simple, once you understand deeply many other concepts. Study what happens in every liquidity pool, and you will see a common pattern appear. The answer lies in understanding if something is broken truly or falsely. And this something can be found in every chart and in every time frame. Once you understand what it is, it shall open a new world to you, and you can achieve financial freedom. You can think about it. Here's a clue. And to finalize, let me leave you with these beautiful words from George Washington. Truth will ultimately prevail while there is pains to bring it to light. Few men have virtue to withstand the highest bidder. I hope I shall possess firmness and virtue enough to maintain what I consider the most enviable of all titles, the character of an honest man. I really hope you found it valuable. I know this video was very valuable if you understand what I'm talking about. So I hope it helped you open your eyes and improve your trading. I'm surely it will do that. So I've been not posting many videos because I'm in a little vacation. I'm going vacation next week to going to Mauritius, Islands, to the beach. Gotta get tan. You see, I'm so white. So yeah, I'll see you guys soon. I'll see you guys in the next videos. Remember that you can get in the Discord, best Discord community in the fucking world. You can follow me on Instagram to see more of my personal life. And yeah, I'm happy to be back. I'll see you guys in the next videos. Bye bye. Have a great week.